All right. I hope everyone's having a nice weekend. I'm looking forward to a pretty comprehensive update today. I think the key here is the first two things I'm going to go over. Again, just as a reminder, I'm not a financial advisor. Use this for educational purposes. Nobody knows what's going to happen next in markets. Things I talk about could go up, they could go down, they could go sideways. That being said, I've got some pretty strong convictions. And to me, right now, the market's set up in the most bullish place it's been in a long time, in 1,200 days, in 1,000 days, in 1,216 days. Uh, Spoiler alert, some of those numbers I've got up in front of you for a little bit of an agenda today. We are going over several things. Again, I might go into a little bit more depth. However, the key for, I think the key takeaways will be the first, 10, 15 minutes of this video where I'll go through looking at just the reaccumulation events that Bitcoin has gone through since its inception. That's the first chart I have up, 2-month Bitcoin chart. Next is going to be looking at specifically zooming in from, 2018 to present, what I believe is the strongest correlation that drives Bitcoin's at least USD value in the short term, medium term, long term. So I'm going to be comparing global M2s, the largest M2s, with Bitcoin's price to see if we can surmise anything about what's going on today and why today may be different. I keep hearing, yeah, we made a higher high. However, we made, higher highs previously and went on to make lower lows. And so I think there's one major difference, not to say that can't happen versus past occurrences. And then we're going to look at zooming in on those, the reaccumulation phases specifically, going back to the Bitcoin bottom, the FTX bottom, and similarities we see across the board in every reaccumulation phase, and why I think this is no different. And then, what some redistributions look like, looking at dollar, looking at the oil charts really quickly, then Bitcoin miners and MicroStrategy. And then we're going to call it a day. So with that, let me jump in. 2-month chart of Bitcoin. And again, why am I very bullish here? Why have I been bullish all year? Why am I not letting volatility distract me? Because volatility is a price of admission for this asset class. And if we go back to its inception and we look at prolonged periods of price decline or sideways price action, we notice a few things here. And with Bitcoin specifically is I just believe is engineered perfection. And I don't dare trade Bitcoin for this reason. I think most of us in the short term are going to be wrong. If you look at, those that win long term, and when you look at strongest assets over time, it's those that just hold and don't do much. And so you hear me say that a lot with Bitcoin. That is the antithesis of this principle, in my opinion. Okay. So if we go back to 2011, 611-day reaccumulation type of event. I've got these little, cute little rounding bottom patterns. You can kind of call that a cup. There wasn't a handle here, but it's all in the same, right? Cup handles, rounding bottoms, double bottoms. These are all just reaccumulations on high time frames. And so we saw, a 600-day, almost 2-year reaccumulation event that led to a breakout, and then another little reaccumulation. This is to 2013 now, where you had the first red 2 monthly chart following that 184 days, so almost half year reaccumulation event. Bitcoin appreciated in USD value by 19x inside 6 months. Then we get our next massive reaccumulation event that lasted 1,216 days. 1,216 days. This is from November 2013. Again, another, right, rounding bottom type massive reaccumulation structure. And coming out of that event, you're looking at a 23x inside 2, 4, 6, 8, 10 months, inside a year. And so we're talking about, 10 months, we're talking about 6 months, we're talking about, in this instance, 6 months. So you aggregate the total of those, that movement over the lifespan of this asset class, and it's the minority of the time. It's the minority of the time. Most of the time, Bitcoin is either going sideways or going down, which is why, in my opinion, it's so hard to and not advised to constantly trade this asset. And I'm going to get into what that looks like on a shorter time frame, and some of the things you look for that precede these expansions and these reaccumulations in a minute. But again, following that, 23x in price appreciation, we're in, January 2018, another massive reaccumulation event. Again, this type of, rounding bottom structure. And that one lasted 1,096 days. 1,096 days that led to, the November 2020 breakout, three 2-month candles consecutive in a row, so 6 months, and a little bit over a 4.5x movement. From there, again, this is more similar to me to this structure back in 11 to 13, right, where the bull phase was a tale of two reaccumulation events, and that's just my opinion. I'm viewing this, this is one movement, 1, 2, 3, 4, 5 in front of us. That's my opinion here. Has been for a while. But again, this second reaccumulation event's been going on 1,216 days. We exited that reaccumulation event when we broke all-time highs back in March. And since then, we've got two, if we're looking at 1, 2, 3, 4 2-month candles. So we're still in the 2-month, but 7 months we're working on now. And two of those have been red. Where have we seen that? We haven't seen that anywhere. We haven't seen that anywhere, which makes sense, right? People are smarter, algos are smarter, everyone's looking at the same thing. Everyone's saying, when Bitcoin gets into price discovery or markets are in price discovery, the asset with the highest the returns has been traditionally Bitcoin. It doesn't mean that, again, if it happens in the past, it has to happen in the future. But everyone's looking at the same thing, which, in my opinion, has caused, for the first time, this just massive reaccumulation event that has lasted longer than any. Again, and that's what the data is showing us here. Any in the past, right? People just trying to get out ahead of it, and the market not letting them get, kind of come on for the ride, and sowing seeds of doubt along the way. So, again, why I believe a lot of targets are far too conservative is, if we just look at these aggregate gains, do I expect a 21x out of here, 22x? No. Do I expect a 10x? No. Do I expect a 19x like we saw back here? No. Do I expect a 4.5x from here? That's possible. That's possible. That's well within the in my opinion, given how long, right, this compression, this reaccumulation event has lasted, completely reasonable for us to see 250 plus, 250 to 300K type of move, especially when this is not a prevailing thought right now, even amongst the bulls. So with that, I'm going to go to what I think really is the most important chart, technical, macro, whatever you want to call it, condition that's going on right now. And that is this looking at global money supply. And I've been talking about this a lot since this stage around here. Actually, a little bit sooner. I think I started posting this chart back in 2023. Anyway, the top chart here is, let me just define the playing field as we're looking at it. The top chart, what I'm circling right here, is the largest money supplies in the world, okay? Aggregate. And for you to ask me what the equation is, where do I find it in TradingView? You don't. You type in what I put up here. M2SL plus EUM2 times Euro USD plus JPM2 divided by USD JPY plus CNM2 divided by USD CNH, and that's what you get. That's what you get. Do not type in 1M or Fred. Just this portion, and you're going to get this chart at the top, okay? So what do we look at? This is just fascinating to me. And again, this is probably why there's so much chopping up going on in the market, because of these dynamics have just have had strong implications in the past, okay? So let's look at where Bitcoin has topped out since December 2017. That is this line that I'm looking at here, folks. Okay, that's Bitcoin in line chart. I've got global M2s. I've got them in candlestick format on a 1-month chart. Okay, so Bitcoin tops out here at 20K or 19K, whatever that number was in December. And what did global M2 do? Still 1, 2, 3, 4 more months of expansion prior to pretty major correction in the context of an uptrend, okay? And so Bitcoin kind of snuffed it out first, slingshotted up, M2s continued to rise, and then Bitcoin goes down. Bitcoin goes down, finds a bottom after these M2s start kind of rebounding and going towards previous all-time highs. And so this is Bitcoin bottom January 2019. Next, what do we have with these? What do we have going on with these M2s? So we have this consolidation type structure, fake breakout, kind of retest, and then we're in this channel, and then it breaks out of this channel. Okay, that's what I'm depicting to illustrate with my lines, my cute little lines here. And so what did Bitcoin do during this period? Well, we saw a breakout, right? We saw consolidation, and we hit our local low, okay? Local low in the context of this higher high, right? Lower high, lower low, higher low. We hit our bottom in the context of that higher low, right as M2, global M2s were breaking out. And that's where Bitcoin made its next large move, very large move. Again, that 4.5x type move inside 6 months. All right, let me get rid of those drawings. So next, what did M2s do in the context of this Bitcoin move that I'm talking about? Well, price discovery, massive money printing. Bitcoin tops out again. That's this blue line where Bitcoin tops out, blue line, okay? Tops out, M2s continue to rise 1, 2, 3, 4, 5, 6 months. Bitcoin kind of snuffs it out at first, heads down first, and M2s do very similar to what they did before, right? Kind of a correction, just like we saw back here, correction. Bitcoin hits a low, M2s hit that low, start to come out, consolidate. What is Bitcoin doing? Very similar to what we saw here, right? Very similar action here, consolidation, breakout. All right, so now let's kind of go to where we are today, okay? I'm going to zoom in. I'm going to pull this chart down a little bit. Oh, geez, I hate when that happens. Well, I can do it this way. All right, so we've got our global M2s, okay, consolidating this channel and now we got a breakout. Bitcoin has been, this is a monthly chart, folks. We have a breakout on the monthly, okay? We have a breakout on the monthly that's well underway when we put this up in line form. And so, again, the probabilities are stacked in the favor of the breakout already started. It's underway. This impulse has started. Impulses coming out of major corrective bottoms never look impulsive. They never look impulsive. And the question always is, oh, is it impulsive? Is it not? Everyone wants to see that clear 1, 2, 3, 4, 5 versus a 1, 2, 3 corrective type move. But I'm going to show you next why it's not that easy and it's not that obvious. And so when I'm asked, why am I so bullish here? Why nothing has changed? Why my targets are actually increasing? Is because of an aggregate of all this data that I'm kind of sharing with you. What are some more things to aggregate this data? Well, the Nasdaq, the global proxy for risk. And so I've got the Nasdaq chart up. This is a weekly in line form, and those red lines, as I take a sip of my coffee here, is where Bitcoin bottomed. Okay, since its November FTX low, where it bottomed in relation to the Nasdaq. And do we see any patterns here? I do, right? I do. Not surprisingly, why else would I put this chart up if I didn't see a pattern? And again, just because it's a pattern that's presented itself in the past does not mean it's going to, present itself in the future. However, these are some very alarming coincidences, right? So we have a Bitcoin bottom here as the Nasdaq then goes on to make a higher low and then initiates a breakout. Bitcoin bottoms here, the Nasdaq goes on to make this macro higher low and then reinitiates a breakout. Bitcoin bottomed. If the bottom's in, and again, we won't know that until we look back. But if it bottomed here in August, Nasdaq went on to make a macro higher low and is now in breakout mode. Right? Is breaking out of this structure, just like it broke out of this structure, just like it broke out of this downtrend, this massive downtrend. Right? That's what that is illustrating. So, yeah. So I mean, look, there's a lot of points of confluence. All this to me trumps things like open interest. Why don't you ever see me post anything about open interest or any of that stuff? Because I don't think there's a lot of alpha in that for me. Everyone can see that data. Everyone can see that data. At some point in a bull impulsive trend, the bulls are going to be right for a long time. That's the point of parabolas. That's how they get going. That's how price perpetuates itself. And so I'm not going to get anything good from seeing elevated open interest levels. They could be elevated for 6 months. They could be elevated. They should be going to all-time highs. If and when Bitcoin gets to price discovery, I would expect open interest to do the same thing. And again, everyone has access to the same data. Algorithms are way smarter than me. If it was just as easy as monitoring spot deltas and open interest, and algorithms would be ruling the roost. And but they probably are in the short term. They probably are in the short term, which is why again. I do not advocate for selling or trading, excuse me, your Bitcoin in the short term. Yeah, you want to have fun with a couple percent here and there, whatever. Just be ready to lose it. Okay, I'm gonna have fun with this one. That was the key important, I think, macro view here. Sorry, this is a long video. This is I think for me kind of important in a couple respects. So when I look at the daily chart, I'm thinking about a couple things here. I'm looking number one at I'm looking at the behavior of the price action as it relates to a few things. I'm looking at the hang on one second. I just got to adjust a setting. Okay, just want to make sure it's still recording. Okay. I'm looking at a few things that are really interesting to me. The first being liquidity sweeps in terms of buy side liquidity, in terms of sell side liquidity. What you don't want to see is this, right? What you don't want to see is price action that exhibits you're trying to break out, right? You're forcing new highs, and you've got a bunch of just stop losses, a lot of liquidity that remains untapped, and then it comes after it, and then the market reverses, right? Same thing here. And these are just that's what a bear flag pretty much is, right? That's a bear flag, bear flag, bear flag. Just a bunch of, weak bulls, not enough buyers, a lot of people putting stop losses in here, and boom, the market takes it. Same thing here, same thing here. A lot of sell side liquidity, and the market takes it. And there just isn't there's more supply than there is demand, and the traders get it wrong for a long time. And that continues to perpetuate itself, right? A lot of sell side liquidity. And then finally, the market reaches an equilibrium where that the overriding demand versus the supply reaches an equilibrium. And so at some point, it doesn't matter when that point is reached. And so you don't have to tap that liquidity because now there are more buyers entering the market. From a spot perspective, the traders have less impact marginally. And so that's what the end of a reaccumulation looks like, right? And so what we see coming out of this, again, this is the reaccumulation spring type of event, right? If we're looking at boom, boom, spring, test, SOS, for those of you even following me and how I look at Wyckoff, all right? So what is the character? What do you want to see in terms of the character of the price action coming out of a reaccumulation event? You want to see the opposite of that. You want to see a lot of buy side liquidity. You want to see sweep of the lows in terms of getting traders out before big moves. And that's exactly what we see, right? Just messing around, taking all the stop losses and then making the move. Messing around, taking all the stop losses, right? And then making the move. Taking all the stop losses, making people think it's going down. What's the direction of this? Direction of this is down, right? What's the direction of this price action is down. You see where I'm going here? That's what you want to see. That's what you want to see. And then if we zoom in on what, specifically these reaccumulations look like and some commonalities, what do we have? Well, we have a lot of similarities, right? This is the summer of 2023, where price kind of comes in, boom, all the way down to this 25K level. Everyone says it's over. We get an automatic rally, we get a secondary test, we get the spring, we get a test. And then again, what I was talking about with impulsive behavior, this looked kind of like a 1, 2, 3, okay? Were there 5 clear legs in this? I'd contend that there really weren't. That being said, this was the beginning of a fresh impulse. And so there you go. There's example number 1. Let's go all the way back. I kind of skipped over this one. How impulsive did this look, right? Was this a dead giveaway? 1, 2, 3, 4, kind of a leading diagonal, A, B, C, and then, 1, 2, and then we started. I mean, it wasn't obvious, right? This wasn't obvious. It wasn't obvious impulsive behavior. Let's come up to the only exception to this was our vertical reaccumulation, right? This event here. This was the only exception since the FTX lows, right? Where we had this vertical accumulation, had a lot of sell side liquidity not taken. And the market went up, buying climax. Let's zoom in. Another just beautiful Wyckoff, and one of the greatest up thrusts in phase B I think I've ever seen, right? Buying climax, automatic rally, secondary test, and then up thrust phase B, it's on. ETFs, it's on. Reversal, creek, spring, test, last point of support, jump the creek, sign of strength, LPS, and then it's on. Just an incredible structure there. Again, commonality here, right? This liquidity was tapped. This was not looking good. This doesn't look good, right? You got this range low breach. But in fact, that was the most bullish that the market was. And then again, very similar kind of right there. And then as we get to what's going on right now, now we're, I hope you kind of see the format of this video, real high time frame, lower time, macro high time frame, local high time frame. Now each of these reaccumulation type phases, commonalities that we see, as we see here again, right, same concept. A lot of liquidity taken here. Look what's untapped, right? Just like we want to see, right? A lot of buy side liquidity, there. What you want to see. And so now a case can be made for several things happening, right? You've got a spring type of event, you've got a test, you've got, kind of a nice range low deviation, range, reclaim test, and now we're making a first higher high. And so what trumps everything for me, whether we got one more, kind of stab down or not, my bias here is that we don't. I don't think the market is that rewarding to the masses. When I look at if in fact there isn't, then this is kind of the way I'm looking at the structure right now, right? We had, 1, 2, we're working on 3, 4, 5. And within the context of where we are here, 1, 2, 3, 4, 5 to make this 3. That's the way I'm kind of looking at it. All right. Next, let's look at distributions in action, right? What are some commonalities with the distributions? And again, this is like the opposite of kind of the other charts I've been sharing. This is US oil. This is a weekly chart. This is in line form. This is what a redistribution schematic kind of looks like. And again, where did the price action come from? That's where all this starts from for me. What trumps everything is that parabola, okay? That trumps everything that comes after it. And my bias coming out of a parabola is a redistribution if we get in a ranging environment. I've got the 30-week moving average up here. And we can see, a very, in my opinion, what looks like a redistribution type structure. And where we're, towards a sign of weakness, does it mean it's going to just drop down and come out? I don't know. Maybe it does. Maybe it fights back and does something like that. Or maybe I'm wrong and this is a reaccumulation. But again, I don't see it that way. Same with the dollar, right? Same with the dollar. This to me has been one of the easiest high time frame reads of my career. Quite frankly, I haven't gotten it right in terms of the short-term moves every turn. But again, when I see something like this, I see a parabola. The assumption is we're breaking a parabola, and if we're getting into a range, it's a redistribution. And much like, you might remember, you might not, back in April, May, everyone was bullish on the dollar again. Oh, why? Why were we bullish on the dollar? Because we broke this downtrend. What a major downtrend. We broke it, test, and now, let's go. To me, this was just a textbook, that was the last point of supply type move. And, at a minimum, we're looking at range lows. Now you got this rectangle type structure, which again is just another form of whether it's a rectangle in an uptrend, reaccumulation, or downtrend redistribution. And so for me, the next move would be a breakout corresponding with that. So 95, 93, something like that. All right. WGMI looks bullish. Not much to update here, folks. The big takeaway here is here's where the majority of the volume in WGMI has been trading for the last year. Reclaim that this week, reclaim the 30-week. The price is, again, this whole section of price, that's the rounding bottom I just shared with you on Bitcoin, that first chart. We're trading at the high end of this range. That's a sign of strength. S So you kind of see I use a combination of Wyckoff, Elliott wave, market structure, a little bit of everything in my analysis here. And my short term on the miners, I have to say, was not good. Um, I thought this was the breakout here. Okay. I was wrong. This was a B wave, C. Now I think the real breakout starts. So MicroStrategy, again, last but not least, is leading the way. Look at this beautiful rectangle. So I showed you a rectangle in the context of a redistribution. Now we're looking at a rectangle in the context of a reaccumulation in a uptrend. Look at this 30-week sloping up. Look at the reclaim of this 30-week, top of this triangle. Whether we get a little check back here or whatever, make a higher low and breakout, maybe it comes down a little bit more. I don't expect another test of this 30-week down at 151. I don't. I don't expect it. If anything, the highest probability to me would be a gap up tomorrow and go, but who the hell knows? We're going to find out. Folks, that was a long video, maybe my longest in a long time. I hope you have a great rest of the weekend. Take care. Look forward to doing more of these.